All right, welcome to another episode of Trading WTF. We are pleased to welcome Francis Hunt, a trader and an educator known as the Market Sniper. We're going to discuss his original methods and techniques developed for the past 30 years of his life as an independent trader. And Francis Hunt is a trader, technical analyst, and teacher. He has trained hundreds of people and helped them become full-time professional traders under methods such as the Hunt Volatility Funnel method, which he originated. And I'm going to personally add, I can hear my echo there, so I'm going to personally add there, being the owner of a brokerage and being able to service a lot of Francis clients, I have never seen traders that trade that well. Looking at statements, I'm like, oh my God, these guys are kicking butt. I'm like, who are these guys? I'm like, they're coming from Francis. They're coming from Francis. And man, Francis, I'm going to be joining the community as well and figuring things out. And one thing I'm really happy you're here is because talking to analysts and reading all these reports out there that are going on in the markets with regards to, currencies and expectations, and nobody gets it. Nobody understands what's going on. They're all referring to, well, the market isn't behaving like this and the market is behaving like that. And I'm like, the market is doing what the market does. They're not understanding that the world is going through a tremendous amount of shifts. And if you don't understand the shifts that the world is going through, then you're not going to understand how to react to the markets. And today we're going to talk about, let me just list out the topics that I got here, because I know once I talk about one thing, you're going to get going and we're just going to freak on going. So one of your articles I saw, what does the Great Depression look like? We're going to talk about credit, oil, inflation, rich versus poor countries, inflation, globalization, wars, Bitcoin, crypto, CBDCs, metaverse. We got China versus the USA, World War III, Ukraine. We got testing of weapons, weaponization of dollar. We got got GDP versus what is global happiness index, which is we might be heading towards because GDP won't be cutting it. We got green warfare. We got environment. We got reducing emissions. We got not in my backyard politics for policies versus a completely united Europe. Francis, pick one. Where should we begin?
Well, I'm going to take you back to something you said right in the beginning, and I want to thank you actually for that. And with your permission, I'm actually going to just read out what you said, because this thing gives me more delight and glee. And then we're going to do everything you've mentioned. I've got comments plenty, Rich, for you on everything you mentioned. But right here at the beginning, we agreed after a reasonable courtship where I came to Sweden and met you guys, saw what operation you do. We're very reluctant people to affiliate. We recognize our brand can be damaged. And we really felt you were top-notch guys, and you made the case, and you endeavored to be European of hosted nature. It's not some crazy Marshall Islands situation, yet outside of the restriction on leverage, which allows conservative, smart traders occasionally and under the right circumstances to exploit unique opportunities. And we felt this time was coming, and that's why we engaged with you. And then out of the blue, I get a message from you, which ran like this, and I'm going to read it if you'll allow me, Michael. Please. Hey, Francis, I wanted to do a check-in and see how you're doing. I'm starting to get back into trading a bit yourself. It's very hard when you're a broker to trade as well. It's like the mechanic's car that never gets fixed, isn't it? I definitely want to join the Market Sniper Club, you said, which was delightful to hear. We're always happy to have good quality people coming on board. Highest proportion of winning traders I see coming are from your community. It's time I joined. Can you please have one of your team members send over some information for us joining? P.S. If you had some time, I'd like to get you on another live stream, which we're, of course, now doing. Best, Michael, out of the blue. Thank you. Let me tell you, I've done a lot of things recently that have turned out well for us. Right from single-digit oil calls, bond market top calls, a lot of things. But that message truly made my heart sing, because that is the transportation of a piece of work called HVF method to other people that understood it, internalized it, and are enacting it. And there's a huge credibility gap between theoretically and conceptually understanding something and then smartly implementing it practically in the real world through a reliable broker. And that's telling me the guys are not only got it conceptually, but they jump in the ditch. I don't get to know whether they're making money or not unless they choose to tell me. And just saying that you're getting such a rich segment, and they're all HVF snipers that we've introduced, is truly, truly a beautiful moment. And I want to thank you for giving me that to me. And we'll be delighted to have you on board. I'm ready to take any of your questions. Where do you want to start? Because it's going to be inflation. Do you want to start on inflation? I'll tell you where I just covered it in the interview before. And it's a fulcrum to everything that's happening in Britain with the pension crisis, with Japan and yield curve control, which has now moved to both Britain, France, Italy, etc. All of these concepts are contagion. And it starts with the principle that a central bank is by design an inflationary institution. Repeat after me. A central bank that borrows and proliferates and continues to extend money is an ever-expanding universe of both debt, loans and assets, liabilities and assets. And as a result, interest rates long-term cannot continue to rise. As the pile of debt, they eventually go down, 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 super low levels of interest rates until there's so much debt proliferated. Remember, debt valuation, low interest rates means very high. And interest rates low. As the interest rates start coming back up, the value of that debt starts coming back down. And what you got is this gold standard gilts in the UK. They're called gilts, government debt. It gets a special name, copper bottomed, gold standard. The certificates used to have an edge that was painted gold, as good as gold. Funny they mentioned that. There's a clue in that. And that was a gilt. The certificates were gold painted on the edges. And what you're actually finding is that as good as they say they are, nobody wants to buy them. In fact, there's a net shelf of debt that's being sold. Why? Because we had a key turn in the bond market in August of 2020, post the massive volatility that came with the 6 trillion being borrowed into existence in America and proliferated globally. And we now have a sustained hyper-stagflationary environment. That's my phrase. Stagflation is a long-standing term, but we have hyper-stagflation, which is slightly different from hyperinflation. What it means is you have a very it's a magnified effect on stagflation, which is very poor economic growth for the masses, which is upper middle class, lower middle class, working poor, and working classes. So you've got negative growth environment, increase in their loaves of bread, their petrol, everything, all their costs of living going up, disposable incomes, buying power in real terms going down. That's why much less on luxuries, much less on flights, holidays.
Mikey's feeling the pain. Mikey's feeling the pain.
They're feeling the pain. Exactly.
Mikey's feeling the pain. And I'm not
Yes.
Mikey no likey.
Mikey no likey the pain. And that's the inflation pain, because essentially their game is based on devaluing your money. The game is based on devaluing your money. You can, even when you save, if that yield that you're getting is not your true inflation rate and some more, you're not growing.
Well, here's the thing, like, I lose my mind because, like, in Canada, 2 years ago, just as COVID started, Krista Freeland is like, oh yeah, Canadians have tons of money saved up in their savings. I was like, how are they going to get them Canadians to spend their money? And now as I get hit with inflation, I'm like, man, if these guys aren't earning, they must be burning through their savings. I'm like, God damn, she knew it. And now it's happening. And the play, the reset, the narrative, like the trade, like how do we play the trades? Like these are the trades that we got to play, and you understand what's happening and how to play it.
And it's a pump and dump scheme worse than a small crypto scammer. In other words, first they list this damn thing, then they elevate its valuation. This is what your housing market has done. This is what everything, all the assets that went boom, .com stocks did. These are all cycles of pump and then subsequent dump. And
what my first kid and bought and get a house. I'm stuck with the mortgage that I hate. God damn it!
Exactly.
And I want to. And it's like I'm thinking about China. Let it rot.
Exactly. Right? The rates are going up. the rates are going up on everybody's houses, and to get a fixed deal now, more than 2 years, it's almost impossible. And if you want a 5 or a 10-year or a lifetime fixed, you're going to pay through your absolute nose, and they'll likely renege on it if things get deeply out of order. It's just the way the game is. The banks write the rules of engagement. And this has become a hyper-financialized world. Too much power has been given to professional services, lawyers, investment bankers in the magic circle. This comes to your GDP question as well, because this is deemed high value. Gordon Brown, Tony Blair, never mind manufacturing. Britain relies on energy, never mind new investments on energy. You've got Europe, Japan, Britain, all net importers of energy, needing energy to come in, killed their manufacturing world in the UK, made it non-viable, turned it all into professional services and financial. At the 2007, before the GFC, the pound traded 2.11. I watched it all, I traded it up. It was all financialized as everything. Oh, it was amazing. Being at the center, London at the center of the collateralized debt obligations, the securitization on top of all of this. That was helping fuel a massive Ponzi scheme that then fell brutally hard, was worn very badly by the working class, the middle classes, whose properties halved in value in some cases, unless they were really high end. And this is the nature of the game. And so apart from inflation, they occasionally have periods of great proliferation. They exploited globalization that kept a lid on cost of living to increase the amount of money in circulation. Greenspan said, it's a miracle. We don't have inflation. We can't have it. We're fueling such growth. They called it immense productivity. They lied about productivity. How do you measure productivity? And it was all about the fact that no longer were the dresses and the clothes being stitched in the United Kingdom, in Birmingham, or in America. They all got outsourced to China, India, on a very low labor cost, and they created an immense wall of money. And this is debt. When you create money, you create debt.
Well, that's exactly like the underlying message here is like they're trying to right the wrongs of inequality right now. And at the key of inequality is rich nations got rich off of cheap labor and cheap energy. And now energy is getting expensive, labor going to be changing, everything's going to be shifting. So like the energy game is going to be changing, like the labor game is changing. Well, right now you're seeing like the British pound is becoming like a banana republic kind of currency. So like, you know, lost its value over there. Well, Bitcoin held its value better than the British pound over the last little bit. So what do you say to that?
The pound is in deep, deep trouble. There's no way you restore confidence, in my opinion. What's essentially happening is there is no bid on their debt. So essentially the value of the British debt is here. It should be mark to market valued right down here somewhere, where the first real person, apart from a central bank, is prepared to offer, which is paying a much higher yield, which is closer to covering the real inflation that they are experiencing. So the debt markets are hyper valued to where they should be if a true price discovery mechanism was allowed to take place. As a result, the Bank of England is coming in as buyer of last resort to sustain those values. Why sustain a hypervaluation in the debt market? Because if they don't immediately mark to market, every pension scheme is under-resourced and is deep need of capital injection, most of which they don't have. Corporations have been under-investing in their pension schemes because they all believed they were doing so well on a hypervaluation fiat proliferation model during a globalization stage. Now we're actually getting a deglobalization stage. We're going back to a much higher level of standing inflation, on top of the fact that they've done a wall of proliferation and there's more debt than you've ever seen, and the rates should be down here or a lot higher at the bond valuation.
This is part of everything unraveling.
Basically, because if we mark to market the value, If we mark to mark the value of the debt, it should be right much lower, and the true yield should be well in excess of the current CPI, which is an understatement of the actual CPI, as you have in the States with shadow stats, as you have everywhere, all sorts of retailer shrinkflation and techniques to make the number look less and rebalancing the basket, etc., etc. So skullduggery. You get lies, damn lies, and statistics. They've played every trick and deception in the game, and now, my friends, we've stored up all this rot, and it's now coming. The ceilings are bursting and it's falling on our heads. So what do is the big question.
Yeah.
You get out of all debt in your life. You fix anything that you can't get out of. You fix it at current levels. There could be a super spike coming driven by dollar dominance. You recognize that your currency is going to spill. You rather hold gold or silver. Never mind the paper price, the long run, you're going to be much better served. In the same way that debt is being hypervalued, the canary in the mine to illustrate that there should in fact be real inflation is gold. It should have done the equivalent of 35 to 800. So we should be able to, on an SCM platform, be trading the paper price of gold, doing the equivalent of a $35 to $800 move, which today, starting at around 2,000, would be the equivalent of, a 20x plus, a 25x, and we should be making that. But that paper price is not moving. How's it not moving? Because you can short an unlimited quantity of silver contracts, but you cannot buy an unlimited quantity. You cannot, to the same degree, buy the same levels. There are caps. So they have the power to use paper contracts to drive that price down until such time as there is no more physical delivery. And that's already begun to happen in COMEX. The COMEX delivery numbers are very, very low for real silver delivery. Most of the contracts are just betting tokens that get rolled on the paper price. And Shanghai is actually where all the delivery is taking place. And that's because they make your solar panels. They make many of the products that require the silver, right down to colloidal silver and everything else. And gold is trading at a $50 premium in China. So when you look at the gold price, it's done over the last 40 years, something like that. But it's actually made up of a US session where it's done that. It crashes during the American session. And on the Asian session, it pumps like an absolute hyperbola. And that gives you your actual gold price. So what is actually happening is a discount window for the East that are some of the biggest holders of debt, American debt that is due to revalue considerably. In compensation, they are getting a discount window to secure gold and silver. The money is moving, and the real money is gold. Everything else is currency. And that's the big narrative of what's happening. The money is moving east. In spite of China's incredible over-indebtedness in this cycle, despite what people think of Russia, they hold gold. The thing that stopped the ruble falling, tying it to commodities, gold and oil. And that is a real interesting fact. The pound has nothing it's tied to. It's behind the American rates. It's on 2.25 to Americans 3.25. Money flows where it's treated best. Sell the pound that's going down, earn more interest in America, and have a currency that's going up. That's when you, in a year's time, you convert it back to pounds, it'll be below parity. That's our prediction. So we're seeing the failure. We spoke of a village of currencies with the most rest of the world emerging ones outside the village walls. And the monarch is in the middle, the super middle. This is the world's global currency head, Russia. Then you have the euro and the pound, and then the Turkish lira just inside the walls. When the horde is coming in from all sides and overrunning, it takes a while, and they kill all the other currencies outside the walls. Then they breach the walls. They get the rand and some of the others. Then suddenly all that money is fleeing into the final last refuge to do its final stand, and that's in the dollar. So as that gets suppressed, where does it run? It runs a lot into the dollar. It's also run into physical gold. Demand's gone up 490% in the UK, week on week, especially during this period where everyone realizes their pensions are a promise. It's a contract. It's going to be broken. You'll get UBI. There'll be some negotiated settlement where someone will represent the pensioners and do his damnedest and fight with government, and they'll do a little puppet show of controlled by the same man where he's fighting for the pensioners and the government saying we can't afford that. Little puppet show happens, and then they say, hooray, we've run a great deal for the pensioners. You're going to get X amount of UBI in lieu of your pension. you will get X amount of CBDC. And by the way, it has all these other features, which will be total surveillance finance. Data, data, data. They'll know more about you than you'll know about yourself. And that's where we're heading, Michael.
CBDCs, just to start.
Indeed.
Universal basic income.
And all that goes with it. And this is not a conspiracy or a tinfoil hat thing. Listen to Carsten's look in the microphone and talk about it. This is not a crypto. It is centralized. We control it. We can institute controls where we can refuse a payment for a product that we do not wish to see purchased. Ergo, meat, too much methane gas, your cow farted too many times and you've already had a steak this week. Something else. Alcohol, you've had your one shot of whiskey this week. You can't buy another bottle until 6 months' time, etc., etc., etc. You can't do this. What's your social score? Oh, you don't qualify for a trip overseas until you've done more socially relevant and approved green-related activities, etc., etc.
So yeah, China's adopted surveillance capitalism. That's exactly it. Surveillance capitalism, right?
It's not even a capitalism. It's an out-and-out Bolshevik communism. That's why it's China is leading the race on it. It's an absolute communism. It's the stripping of all freedom that finishes with the loss of private property. There's a reason that World Economic Forum goes, you'll own nothing and be happy. It's so nice not to have the responsibilities. You don't have to insure this and insure that, and look, you'll rent a house, rent this, just for the days you need. We'll run it off your CBDC wallet. We'll have that little tertiary extracting machine taxing you every time you use the aircon. It's not yours. You don't need to pay for the power. Everything is rented. You're going to be so happy with the farmer we're going to be pumping into you. That is not a life. That is a slavery. It's a serfdom by a supremacist, draconian world order that wants to establish itself as the elite class. By them saying you'll own nothing, they are saying we are going to take your stuff and put you as a tenant in your old home and rent your motorcycle back to you and rent everything that you previously owned, that we're going to force you out of owning at the bottom of the cycle in a massive deflationary event. So people should be stocking up on cash in dollars, ideally, even if they're in Euroland, wherever they can get them, but cash euros too, because they'll have to stand by that until they've cancelled cash, which they're coming to do, but they won't be able to do in a hurry. They still have to give you notice. People should get out of thinking that they have a pension. It's going to be reneged on. Get a self-invested pension and buy physically held gold, and recognize if you can't own it and physically hold it, you can't, it can be confiscated. All forms of intrusion can occur. These are freedom reducing times, unfortunately. And this state has been emboldened by the power that the technological surveillance of every gadget we carry around, its global positioning satellite, knowing where you are, who you are, when you are, biometrically everything from your face to your fingers to login, all in the name of convenience and safety. The things that get done in the name of our convenience and safety. When a government who makes you queue for hours to get a new document or anything ever truly cared about your convenience and safety, unless it's a sales pitch to get you to do something that compromises you and compromises yourself? That is their playbook. And this is a financial D-Day. You are watching World War III in a financial sense. This is economic case history for our times. People, you need to buy silver and gold. You can trade this big short on the great contraction, utilizing through our community with great method, with good understanding, and through reliable brokers that we have vetted, such as Scandinavian capital markets. And you can purchase pure gold and silver as well out of your profits, and you can survive to thrive. And gold and silver is wealth preserving materials.
I just feel like the price, like how you explained earlier, like how the price is being suppressed. I'm just like, this price should be so much higher. And I'm like, just like you said, with all those contracts that they just keep selling and selling, that's how they suppress the price. So
when you are artificially extending and holding one asset artificially up, there's always a diametrical other force. It's a bit like, the lilo. You can't push down on the lilo on one end without the other end popping up, and that's when you tip into the water. The laws of thermodynamics, the laws of water finding its own level, the laws of financial systems, is if you intervene in one area and create a distortion, the nature of the free market is such that it will twist and distort diametrically opposing that somewhere else. It's kind of if I carry a massive weight on my left shoulder and not on my right, I'm going to develop, a certain asymmetrical slouch. And it's exactly the same in financial systems. So whenever there is an intervention in one place that holds something up, somewhere there's the thing that normally shows up, the fact that should be much lower, the debt market by valuation, that canary has to be killed, that tweets in the mine when you're hitting the gas level. And that's gold and silver, the precious metals complex, because that is true money, and they only find it at around a 1.5%. And finding it is hard enough. It's getting more expensive. It takes energy. It's getting more curtailed by carbon taxes because of the green movement. Gold can only go up. It is unique. It has unique properties, and the same for platinum, silver, and many of these other things. And it's been wealth for millennium. It's been wealth for millennium, and lots of health benefits from silver as well. So these are truly unique things, and they're going to come out with all sorts of crazy narratives. There's an asteroid full of gold whizzing past planet Earth, and all these crazy stuff that some of the crypto guys have come up with.
Elon found it.
Yeah, Elon found it, and he's going to throw a big net around it and kidnap the asteroid and bring it to Earth, and there'll be an abundance of gold for everybody, and he'll do this for free. And while he's collecting his floating car in the stratosphere somewhere, and all the other nonsense that they've been telling us. I mean, there's never been a greater perversion. The news flow. There's a small amount of fact and truth mixed in with a whole bunch of false narrative. They've got banking here called selfie banking. Just take a picture every time you log in. This is biometric facial biometrics being grabbed every time. Yes, there's a crisis. People's accounts are being hacked. Welcome to selfie banking. We're making it safe for you. No, I don't want to give my selfie to everything. Listen, they'll grab it from, if you're on Facebook or on Twitter and 101 other places. But I'm always looking forward to putting bumps on my head and wearing masks and things just to give these guys false signals. We really need to push back against this overarching dystopian world. And there's going to come a point once this plays out that I might go radio silent and go very remote, and I'll be on CB radio, private pilot license, and I'll stop carrying any form of mobile device. I'll be on land, farm. I will assure my power, my water is all self-sufficient, provided by me. I will assure crop and access to crop and food, and I will watch the world burn and go into a slave society. And I'm afraid those days are much closer than we realize.
Totally. So is that the Great Depression? I saw in the article that you're talking about the Great Depression. That's what we should be expecting?
I feel that the Great Depression was particularly US-centric with some blowback on Europe. This is going to be entirely globalized. I regularly refer to the global village of lepers. Every nation state has kissed the leper to enter, to be part of this game, to ensure they too have the leprosy. And the leprosy is over-indebtedness, over-proliferation of fiat, inflation-focused central bank that has now led to hyperinflation, which they now, in the name of being good bankers, are now trying to control, which is absolutely creating ever bigger pumps and subsequent dumps. COVID was the final blow-off pump. That's 7 trillion. I mean, I can't even quantify how big a number that was, going globally and everywhere, not to mention how many trillions were sent to European banks during the repo problem of 2019. They were sustaining key banks that are all correlated and tied together like fingers, like that if one falls, the whole grip breaks. They sent to UBS 2.8, Deutsche Bank 1.9 trillions. You're talking about trillions. This is separate to the 7 trillion they printed. Behind the scenes.
When you go to Dubai, they talk about billions. Now we're talking trillions. We got to up our game. God damn it. Fuck.
Yeah, and I think the total was around 20 trillion that went to offshore, non-US banks. And then they were sending the similar amounts to American banks to sustain derivative positions. These guys have to let this whole Ponzi scheme go now. They want to start the cycle again with a clean sheet, and a new generation will be born. Only this time they'll be totally controlled. They'll never be taught about the cartel of central bankers and the poverty they reap and sow on the working class and the middle classes of America, Europe, Britain, and everybody else. And you'll never hear how the billionaire class that gets to borrow cheap, how their debt gets deflated away with the super high inflation, and their assets that they secure with it that are income producing climb ever higher in valuation. But first we'll have a dip, and BlackRock will be there with a bottomless checkbook to buy your home and turn you into a tenant in it. And that's the game. You will own nothing and be happy. Think about it. You don't have to worry anymore. It's not your house. No, I actually dig owning stuff. And I'm looking forward to leaving a few things to my children. Thank you very much.
That's why they're legalizing weed right now. That's why they're legalizing weed, and then the hallucinogenics are going to be next. So yeah, yep. Everybody's going to be in a free spiritual world, opening up and whatnot, or in the metaverse, experiencing a different type of virtual life. Because what else is it there?
Just that. You'll have your best friends will be in the metaverse in another country, and you'll share the same gun for shooting baddies. And you'll be a hero and you'll own land in the ether, and you'll be a tenant in your AirPod in some hyper 5G, 6G urbanized neon city like the Saudis are building, who are absolutely an axis of evil, of advancement in the same way as China on many of these things, and you'll be totally monitored. And these modern cities, you may as well just paint the sign Auschwitz on them. They are concentration camps by another name. It truly is that. But the people will go, oh, so cool, so new, so convenient, blah, 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 blah. Yep, indeed. And you will comply, and you will play by the rules.
Well, you think, the war in Ukraine is real. Lives are at stake, but I feel like this is also a playground to test out a lot of weaponry and stuff like for the future, like you're mentioning. So just seeing stuff with drones and stuff like that play out, and just the whole lunacy of Europe being united, supporting this, shooting themselves in the foot with the whole energy crisis now. It's like, like pretty much the great narrative says, the narrative says they have to do energy. And it pretty much said, if COVID isn't the narrative that does it, they say people understand things in narratives. So they understand things in stories. So if life is happening to them in a story, they will understand what's happening to them and it will make sense. And it said, well, if COVID, and this is published after the Great Reset, and it said if COVID wasn't going to do the trick for pushing out the advancements that they needed, there will be other narratives that happen that do that. And so
the watermelon communism is very much one of them.
The what?
The watermelon communism is very much one of them.
What is watermelon communism?
Watermelon communism is green of outside, red of inside. And that essentially means in the name of environmental reasons and also equitable, it's very green and non-racist and very, friendly to the planet, friendly to all the people, trans, everything else. It's all very, but particularly the environment leverage. But actually the core is actually red, which is the symbol of communism. In other words, the supremacist class that restricts what you can do in the name of saving the planet, but allows them a free pass because they are the overlords ruling who will continue to fly by private jet. And this is why I've predicted the end of the discount airlines industry, because we're going to travel less. The average man's going to travel less. The people that travel business class regularly will probably step up to a sort of special private class, or there'll still be some business class only planes at high value and rarely run, like once a week. Discount airlines, I don't see them surviving. And neither do I see the everyday retail bank branches.
Yeah. Retail, right? Yeah. What do you need service for?
In fact, you'll check into your virtual playroom, and you'll get downloaded to your chip in your brain a holiday experience on a tropical island. and you'll pay much less for that, and you won't need to travel. And hey, you can even feel the water lapping on your legs, and they'll sit you in some immersion tub, you know, you can sit there masturbating and fantasizing about being on your tropical island, having an experience. That is essential. In essence, they believe as much as they can deliver virtually to you as an experiential event through AI, through things that you particularly like, that they've modeled according to your preferences on many, many things, on data that they are just accumulating on such a scale that only incredible computing power can spend continually squeezing and calculating the best way to manipulate you, the perfect female character wife that will be supportive when you want her to be, and cuddly and nice, and then a little bit firm and giving you a kick up the arse when you need to be, idealized to always just feel like the person that's giving you the key nudge at a key moment that just happens to be serendipitous, that you saw that advertising and now here you go, there's that opportunity. This is going to be consumer manipulation on a scale you haven't seen. These people want to see to what extent they can reduce you to literally a handheld puppet that they totally control right to a micro level, that they can leave to a computer to have you dancing to tunes that they can occasionally check in on. And literally, it wouldn't surprise me if they could take a whole swathe of people like lemmings and get them to jump off a cliff if they felt the population numbers were too high, or to show up for your euthanasia injection. Such a nice gesture, leaving space in the world for other people. Now that we're in this green climate crisis, you've had a good life. 30 is not a bad age to die. You're starting to feel some pain in your lower back. We don't always have cures for that. You've got a cancer that's planned for you 5 years from now, because we've been giving you the happy juice from pharmaceutical company XYZ. Yeah, you know, earn some brownie points for your nearest and dearest. Sign out now and we'll give you a wonderful show as you go. In your mind's eye of fireworks, endorphin and everything. Go out on a high. There you go. Have a little death experience. I mean, it sounds far-fetched. I tell you what, the sketch of Monty Python with one of the characters saying, I want to be a woman now. You can refer to me, what was the name he said, as Lucia. And they said, you're not a woman. I want to have a baby. But you can't have a baby. You don't have a uterus. Well, we're there now. The Monty Python sketches have arrived for our reality. That's where we are. So, I mean, this is yeah, I mean, we are literally living, and the film industry is absolutely also a prepping. It's the
build the images for the narrative.
Suggestive.
Yeah. There's probably 30 or 40 books. Yeah, 30 or 40 books and movies that they say help get us ready for the future.
Yeah, Terminator being one. And, you know, it's suggestive. Hypnosis is built on suggestions. Creating, would you ever do this? What would you ever do that? So, I mean, and I'm afraid that it's also a great perversion. The damage on children, the normalization of pedophilia. I think there's some pretty dark topics coming. But this isn't a broker chat. The point of this is, okay, that sounds horrible.
Well, we're in the reset chat today, so we can talk about anything. So
yeah. Well, you'll find your channel might come into trouble at some point, and I don't want to be the guy responsible for it. But the key thing is, what do you do? What do you do if someone owns the game and is changing the rules on you midstream? Okay, recognize what the new rules are going to be before everyone else. Be early, make a shed ton of money, and use those funds to buy yourself as much freedom and hold back the tide of taxation that's going to try to shake you out of your homes, on taxation that's going to try to shake you out of freely will-driven cars into autonomous vehicles.
Interest shaking you out of your mortgages. Yeah, the crazy mortgages.
Yeah, turning you into tenants. Exactly.
Yeah.
Fight all those things. Be a last survivor with real owned assets, and be a leader for your community. And wealth and speculating in these times right now is a golden opportunity. I mean, you read it. Our guys are doing great. I didn't even ask you for an email. You sent it to me, and that's why we're actually chatting today. I was like, so I'm just so glad because the execution is clearly better than everyone else in your portfolio as a random client that's come to you.
Francis, they're holding trades. They're holding trades and they're banking points and pips. They're not over leveraging. They're not over leveraging. There's someone who's just riding the market. So when those trends hit that you're talking about, they get in and then they have their levels and they go in and they get it scaled in and they're just like, and they're banking the points and they're just riding it like a wave. And it's like, and like, that's what trading should be. You ride the wave of, and like that momentum and like that's what's exciting, and watching your traders do that, man.
Is there's an absolute tsunami on its way. And you could have screwed up your whole life. But if you show some patience and you ride this one tsunami, it will carry you and your next 3 generations and keep the Bolshevik technological surveillance finance state merchants at bay for all 3 generations. You only have to get one wave right. Everything else you could have done could have been a cock up. This is so big. The moves will make you the money. You don't need to oversize. It's something I say regularly. You just have to be in them, and you just have to be small, and you just have to let that moment come. This is the biggest pump and dump that you've ever seen. And shorting markets, the profits come quicker. The markets fall harder, then they go up. Always. Look at this bond chart. Let me just show you the bond chart on the valuation of debt. We'll go to the least volatile one, the American 10-year. We'll go to a chart share just to bring a chart into this. This is the US 10-year yield. I'll do share screen. I think it'll work.
All right. Daniela's going to have some fun over here. But either way, we can record it. Yeah, we can
record some stress. If it doesn't work, as I say, I will send you the chart retrospectively for any edits. But if you look at the US 10-year...
Daniela, don't have a heart attack. If you make it work, you make it work.
In fact, let's have a look at US 30. The US 30 is actually the Dow. I want the debt markets, bonds.
Because, yeah, well, just as you're loading the charts and talking of the weaponization of the dollar, I'd like to understand more about the weaponization of the dollar, because you see the dollar just going up and you're like, oh man, I missed the dollar move, and you're like, and it's not done.
It hasn't even started. There's going to be a super spike, in our opinion. The problem people have is they think if they're not first, therefore is no point committing. Well, we were very, very early. Here's a 10-year. Let me turn this from daily into 3-day because the candles are a bit dense, and I'm going to share this on the. I'll hit screen share for you in a second.
All right.
Debt is devaluing, friends. It is devaluing, and it's the main story of this is debt. So where we go, share screen. You might have to permission me. Start sharing. Let me know if it's showing.
Yeah, I'm definitely seeing it. I don't know if Daniela is able to get it on there, but hopefully she's recording.
So here's a little bit of what happened. This was the COVID slapdown on debt. I'm going to just show you where it occurred in blue. This is value of the debt. So this is a high value, and you've been in a bull market for 40 years. So this is an all-time high on an already 40-year market. I'm only showing you the last 2 years of a 40-year. I'll go to the monthly in a bit, maybe. But this, we said, no, we don't like this. This is a steeply ascending. It's very common of final tops where everyone's been programmed to buy the damn dip. This structure. After that slap in the face, that smack there, we said that is the top, in our opinion. And actually, we're going to go down. That's after 40 years. It was our first top call. There was a little head and shoulder there a little bit for you, but for that spike going a bit higher, which makes it imperfect. Then you got a flag there, and then you started the spill. Slow at first. Then everyone said, there you go. Buy bonds, wear diamonds again, because it started to go up. We said, no, broadening structure, continuation downside. And so you've continued to go, and this thing is down, 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 and it started to accelerate as more and more people realize. Really accelerate. Debt is finished. And you got a big bounce there, down, flat bottom right over here. Man, oh man, that's horrible. That's going to lead to further downside continuation. We have the Fed speaking Thursday, tomorrow. You will have them on, well, not speaking, you'll have CPI numbers. This is a huge loss of value. So that was 140. If you're a pensioner and you're a pension fund manager and you are buying debt at 140, it's now worth 111. You've lost going on 25% of that asset. So the asset has shrunk, and all the previous ones that you bought have also shrunk by 25 from that high water mark. And now they're paying a rate that is lower than the rate of inflation. And some of these pensions are even being inflation linked. So you might even on portfolios where those pensions, many of the government pensions are gold plated and inflation linked, the contract says. And if the official inflation rate in the UK is 10.1 and 8.6 in America, you've got to pay 8.6%. Well, how do you do that on a pot of money that's lost 30% and only paying 3.25? You're only earning 3.25 on it. And now you've got to pay
something that's 30% less.
8.6%. And the pot just shrunk by a quarter.
Yeah.
You have to start selling the asset off itself. How does that stop that asset value from going down even more?
Further.
Because everybody's faced with the same problem simultaneously and all has to sell to meet margin calls and to have cash to pay their existing pensioners. Never mind, they don't even have the cash to pay the existing pensioners. Never mind you who's 50, waiting to turn 65. You've got 15 more years of contributing, and these guys have already run out of money. And they've already taken 30 years since you were 20.
Well, you just changed the game.
And they blowed all that money, making terrible investments in a debt market that's losing value.
Yeah. You changed
the
game.
They renege. It's a game closer. It's a change of the game. But government debt was always a sure thing. Buy the damn dip. Buy the damn dip was a meme, not of an investment strategy.
What does the reverse Bretton Woods look like now?
So on the point why I went to this, and I will answer your question next. On your point why I went to this, I highlighted how markets go down harder, meaner, and much faster. Fortunes are made on shorts. And this is, this chart is only giving me until 2010-ish odd. And you can see right here, the last big up move was very, very strong and blasted up on a 6-7 trillion of debt. Look how that's gone down.
Yeah.
How much further, faster, and how little time. The high was there. Just before the beginning of 2021 to now, you've gone down at an unbelievable rate. And this is bonds. Bonds are sleepy. They move tiny little ticks. You're talking about the tortoises and the snails of the market.
Yeah.
Big lumbering giants that barely move. They're falling apart. No more. The debt system is no more. And until people realize that, what does that mean? It's the end of the financial system. Get physical. You've got to be physical. Anything that is digital will potentially collapse.
That's real. Yeah. Just get physical. And physical. And the only thing is gold, because you're not going to own your house anymore.
Well, you can own your house if you pay for it outright. You expect actively for wealth taxes to come for anybody who is smart enough to own a house outright. You should also own it in vehicles, reset prepared vehicles that the same cartel use against you. Foundations. We help people set up a foundation that doesn't have your name in it. That will have a board of people that will execute on your behalf. Your children will not be taxed when it received it. Inheritance taxes are going to go up. Asset passing is going to go up. They don't want this transgenerational wealth. They want it for them. They don't want you to have it. If you do not have vehicles, we specialize in this. It's part of our business. I don't talk about it enough. Your SCM with you in a foundation in Panama, and you could be living in England. You could be living in America. Guess what? That creates a myriad of shit for somebody who wants to attack you. First of all, they've got to know Spanish. You can get a translation for your own documents and make sure it's right, but you can just throw them Spanish and say, read that. And no, I'm not involved. I'm just a fortunate owner. Unless they ask you who's the beneficial owner, you don't have to say anything. And then what do? You want to sue a foundation in a different jurisdiction because they think you should be paying more tax? Good luck. How are they going to even get that information? Your name's nowhere. It won't show up in searches. And when you die, the asset doesn't get beaten up. It goes straight to your wife, your son, your daughter, your granddaughter, your special interest group, whatever the case may be. People need structures. And some people will be sitting there right now and going, yeah, but it's too late. It's too late. I can't start now. I won't make it. It's never too late. You always have more time. This is a slow motion car crash. It's Inception, the movie. If you remember Inception, the whole movie was that van that went off the side of the bridge. And every second, and they dropped a time frame, and they dropped a time frame, and they dropped a time frame. They spent years in the lower time frame doing tons of stuff and came back up, and the truck on the highest time frame had moved like a couple of meters more heading down towards the water. The whole movie was essentially that van crash. And they had battles and all sorts of things. And when they went deeper and deeper, you had entire lifetimes run. You have way more time than you realize. By the time all the curtains are down, this is contagion. They're going to let each thing knock and flow. It's got to look organic.
Yeah, because everything's connected, interconnected. So once one thing falls, they can blame it on the other thing, and then just to make the story, believable. They can't do it all at once.
There has to be a shock and awe period, confusion, everybody mesmerized by a new narrative, a new war over here, a fight over there, a hack here. And they've got to play this out. You're sitting through a theater and you've got to watch Hamlet happen. There's a couple more suicides, a double hanging, a poisoning, a lover's fight. It's all got to happen still. And you're saying, I don't have time. You've got an entire movie waiting for you. You've got more time than you know. We have people standing ready to open a foundation in your name. Put your trading accounts in there, put your next property you'll buy that you'll own outright, or you'll have a fixed debt deal on it so that they can't shake you out on interest rates. And you can make absolute millions in a single one of our trades with what's coming. It's the biggest moves you're going to see in your life. I've stayed on dollar dominance. I told everybody that Brent Johnson will be right. He's just early. I said, we're coming for an HVF. It's going to run. The dollar index will at least run the 111 levels. That was at 87. That's huge. That's huge. It's watched the euro go from 117 to 96, 0.96 cents. You've watched the parity run. You've traded the euro Swiss franc short with us. You've held, you traded the TLT. I've got
how low could the euro
TLT.
go? How low will the euro go? How low will the pound go? Damn, yeah.
I think into the 0.8s and sub, the euro. Yeah. And the pound will run parity, and I think very, very similar, 0.8s. I think the euro goes to 0.7. Against the Swiss franc, we're seeing 0.69. That people are going to be like, things you can't conceptualize are going to happen. And it's not going to be great for the crypto kids. We're short right now. We're short the cryptos. The dollar dominance is going to eat everything. It's the macro market. The macro market is the earthquake. It doesn't matter which house and what sexy apartment you bought. The building's getting knocked down. The earth template, tectonic plates are going to shudder like this, like they've never shuddered before.
And this is why I respect you so much, because you were not married to Bitcoin. You rode that motherfucker up because you saw that it was going to go up, and you understood why it was going to go up. And also now you understand why it's going back down. And you're just in it to win it. And I love it.
You've got to exercise dispassion. You've got to marry your girlfriend, make her your wife. Don't marry your trading assets. People think because they made money on something that it's going to keep cuddling them. And they build an emotional relationship. This is why they're going to be manipulated by AI and bots and everything. Because you're going to cuddle up to your bot wife that has a program chip, because she's going to say the right thing at the right times. They're going to know exactly what kind of vanity, narcissism you have, and she's going to poke and all of this. Marry your girlfriend, make her your wife. Everything else, you are totally dispassionate. I want to be a buyer, and I put out huge bull clips in bull season on Bitcoin, on the first cup gold nugget, on Solano. Now I'm calling Solano 90% down. from here after already a 90% down. We called the top at $260. It's trading at 33, 34 range. Now we're saying it trades 3. And we got community members who sold the 260 mark and banked massive 6-digit sums. That they've told me, I did it, I executed well, they're rich and they're doing great. There was a viewer's question that Daniela is so polite, she's posted for us and we haven't responded to. Do you think that part of this dip in the dollar could be from oil being sold in rubles and Russia exploding the price of oil artificially? So no, I don't think that's the reason. I think the Fed and the dark state and the people pulling the strings behind all of that are weaponizing the dollar. And what do I mean by that? Because Michael started to refer to that, so we'll answer that question. To destroy everything, we need one thing to pump for all the others to dump. And the dominant currency, the world currency, its surge will make energies go artificially high, even though they might drop in dollar price a little bit when the dollar truly surges. They won't drop significantly because energy is stubbornly inflationary at the moment, because we bifurcated the global supply chain by excluding Russia, Russian gas, oil, by excluding bad nations like Iran and all of this, and creating bad news about all of these people and shit talking them. So we've gone from globalization into deglobalization as a result of this anti-Russia thing, which is absolutely perfect for creating inflation. So they've created the inflation, and now they're going to create an overfight on the inflation, so that through doing that, they can policy error their way into weaponizing the dollar into a super spike. And what that effectively does, it's the controlled demolition of the financial system, because Perkins, the economic hitman, embedded dollar indebtedness into all emerging markets and even other first world markets. So they borrowed in dollars. And it's the worst idea when you don't control a dollar to borrow in dollar if all you can print is the Botswanian peso or the South African rand. Because what actually happens is you've just created a massive foreign exchange risk. If your currency loses value relative to the dollar, you then become a failed state. And that means you become owned, and ask Sri Lanka what it's like to be owned by China. You become part of their footprint for the Belt and Road system, and your port no longer is your port. They have a 100-year lease on it, for which they're paying you very, very little because you lost all their money. So you become a tenant in your own country, where the ground you stand on is owned by a different country, and you pay rent to build a house on your own piece of land. That's Sri Lanka, in essence. And so this is the economic hitman. And the rest of the world is buried in USD debt of great levels. Not so much pound and euro land. They've got their own generic debt. But their currency is going to fall so far that they're going to have debt-based crisis. And the dollar spiking is going to see flow outs of euro, out of euro shares, out of euro bonds. So we've seen the flight capital. What I'm discussing now is a flight capital concept. What ends up happening is the surge of all the weak currencies that are outside the village walls stampeding in to go protect the king and be in the most fortified part of the center of the little village as the Vikings are coming. So you get a surge of fear from the outer rings towards the middle. So what actually is happening is we're seeing the Hang Seng going down, and that money is flight capital, because the Hong Kong dollar is bouncing up against its peg, and they're having to continually proliferate. We see the Kospi going down in Korea. At the same time, we see the USD Korean won pumping, which means the Korean won is devaluing. So what you're actually seeing is money leaving, juices being extracted out of South Korea, out of Hong Kong, out of Japan. Any investment that was of any international flavor is first seeing the shares sell off, and then seeing the currency being repatriated back to America. So all the investment that's there is being repatriated. And the Japanese and all these other nations, in a bid to defend their currency, have already been dumping their treasuries and selling off. And the dollar's still gone up.
What's left?
What happens when they have no more to sell? So with people defending and unloading their dollar-based assets, which are going up in value because their currency is losing, but they're selling their best assets to try keep a put. They're throwing good money, trying to protect bad. Not that I'm saying a treasury
Bretton
bill is good
Woods, New
investment,
World
but
Order.
relatively speaking, it's not going down because the dollar's staying strong. And they're selling dollar-based assets, treasuries, and they have been doing it at a furious rate. And the dollar's shot from 87 to 113, and they're running those balances down.
The U.S. can't have wars everywhere. If everyone says we don't want to pay you, the U.S. can't go knocking on everyone's door.
No. And that's what's happening. So the interest rate is also going up. So you're being hit. You borrowed, let's say you're Turkey, and you borrowed 100 billion here, there, built an airport, did whatever, and now you've got some of those things organized for you by Halliburton and these other quasi-governmental dark state organizations. What's now happening to you is that your currency, the Turkish lira, has gone from 1.3 when I first started going long in 2013 to 18 or 19 to the dollar. So you've lost 20 times almost. And at the same time, the interest rates are going up on that debt in dollar terms. So the bill in dollar terms is going up because the interest rates on the debt is going up. You already lost your rating, so your charge out rate got higher with penalties because you've gone from a good risk to a stable risk to a bad risk with negative
you can't print enough money to pay it off fast enough.
And the more you print, the more that 18 becomes 36.
The exponential rate is just getting out of hand. Yeah.
The snowball is halfway down the mountain to flatten the village. There's no superhero. There's no Marvel star that shows up and stops it dead on the 45-degree incline.
Well,
4 tons of rocket snow.
There's a new world order coming with a lot less consumption and a lot less everything.
Yeah, and it's now, well, it's time. We tried that. It never worked, they're going to say. We tried it. It never worked, this capitalism thing. No, we never tried capitalism. We tried capitalism with the downsides of bankruptcy, indebtedness, and everything for the working classes. And we tried cronyism and cacocracy for the billionaire classes that got to borrow insane amounts at ridiculously low rates because they were born into the right families, ran the right companies, got given, all these companies that supposedly started in a garage. Apple started in a garage. Facebook started in a dorm on a campus. All of these, just this child genius, he did it all himself. They make their heroes for you. Every hero is manufactured. These were CIA dark state creations that were tools for surveilling you, for you to load your face up so that they knew who you were. For them, Zoom is a tool probably designed to capture your voice print. They know how you walk. This is an entire profiling of all citizenry. It's scale. And it's not bound by national borders. It's not, if I'm sitting here in South Africa and I have a South African passport, it's not my South African government. They're a junior little regional World Economic Forum sub-branch. This is run at top level. This is run at top level. There is already a new world order. Oil was your global tax and still is. And you're now being hit with it. And inflation is their game because it's the perfect impoverishing tool of the people they wish to flatten so that you can own nothing and they can take your assets off you for next to nothing at the bottom of the dip because you never saw the scale of the tsunami that's coming at you. And I'm saying instead of standing on the land when the water is sucking out and running deeper further into the sea where the water used to be and going, isn't this cool? And loading up on debt and then suddenly realizing there's the 90-foot tsunami coming and you've run too far and you're going to get clattered. We stood up on the mountain and said, the tsunami's coming, get your surfboards. If you position in front of it, you're going to have the ride of your life. And you're going to ride roughshod over all the idiots that went too far into the debt cycle and are now running away from the wave and about to be swamped. And you're going to be on a surfboard going over their heads while they drown. And I'm sorry, the world is divided. Yeah, well, the world is divided into people that look at what's going on, understand what's going on, and prepare for it. And those that ask what happened and then get swamped. And that's what's happening. Right now, that's what's happening globally. You can build wealth in these times because they can't cause that much destruction without creating that much opportunity. This is DeMartini. There's optimism in everything, even the dystopian rule. If you come out, what of the billionaires? Yeah, you might have to make a donation to some scam cause. You'll be flying private, and everyone else you'll be part of the supremacy class, maybe. I'm not saying that's a good thing. I'm not saying turn your back on mankind, but you'll have choice. You'll have options. You'll have wealth. Hold some of it physical. It can never be taken away from you. The rest, trade, and recognize that counterparty risk can still come into play. So take some profits off as you go, but don't trade too big. Allow for the big move to make you big money. Don't be too large. Money management will kill you. There still will be pullbacks. Even on the chart that I was showing you on the 10-year treasury, people showed up to tell me how wrong I was every time it bounced. I mean, I'll just show you that snapshot again. On the big screen, it's so easy to see. But I had people saying, you're wrong, buy bonds, wear diamonds a number of times. Here when it bounced, you're wrong. You're wrong. You're wrong. The whole way down, I was wrong. From up top there, 140 to 111, which is a huge move in bonds.
The reason why people are saying that,
the financial currency.
The reason why people are saying that, Francis, is because they're over leveraged. They're getting in too big, and they're not able to zoom out for that trade, I'm guessing.
Yeah, but I mean, on the monthly time frame, these are minor rallies.
Yeah.
In terms of it. And the reason the pound continues down is that debt and FX markets are correlated. As long as the US is paying more than the pound, people are going to buy dollars instead of pounds. So if I just get and what happens is the debt market ignores the central bank and starts making the adjustments itself. If you look at the pound and you look at the pound debt market, here's the GB 30-year yield. Monthly chart. Around here, you're at 0.3. It was paying, call it 0.4.
Huh. Yeah.
That was March 2020. The bonds were at their most valuable. Everybody was scared and buying government bonds. The final last hurrah. Look at it today, 4.79. You've run 5%. 5%. If the 30-year bond is charging 5% and you want a mortgage of 30 years, you should be paying 5% plus whatever margin the bank needs to make money. Brits should be on fixed deals of 7% for 30 years. If you're getting less than 7%, it's because you haven't got it fixed. And when this thing runs to 10, you're going to be slaughtered. You're going to watch your mortgage payments go up 3 times. And the only buyer who will buy it at the bottom will be BlackRock. You're going to have the equivalent of We Buy Any Cars. You know, those wholesale guys, instead of selling your car secondhand privately, you're going to have a governmental, quasi-private, oligarchical company such as Vanguard, BlackRock. They'll have different names in your country. They'll set up a branch and they'll call it Angel Buyers or something else, but it'll be 75% owned by BlackRock, 5% to sort of black empowerment if you're in South Africa, 20% to the guys that do all the operating and running, and 75% owned by BlackRock, and they'll just provide the capital. And they'll be buying every South African home of every South African that sits with a mortgage that he can't pay after the interest rate spiked to 25%. And his mortgage went from, at the rates over here would be around 7.5%, 9% to 25%, 2.5 times, can't do it. Lost his job at the same time because they're going to create a global depression. Small businesses are going to be shut down. It's going to be like COVID. COVID was your training ground drill for the Great Reset. It was here's a short taster of what happens when the global economy stops. You don't get to move, you're locked down. It's like a martial law because people are going to be fighting over food and everything else. Stores burnt in KwaZulu-Natal, where I'm at, when they started to have social unrest here, just post the COVID events. And you're going to lose your house and you're going to become a tenant and you're not going to have a job and you'll get UBI. And this was a massive inverted head and shoulder. This is the 30. This is the value of technical analysis. Boom, boom, boom. There's your COVID volatility that occurred March 2020. There's your head. There's your inverted shoulder, which is a broadening structure with a downward tilt, which means upside continuation. Boom, there's your neckline. As clear as the day. It's on every chart I care to look at. Boom chakalaka, first in a new trend. How's your auntie? Through 5%, you were trading 0.4%. It's all there in the charts. It's kicking you in the balls and you're not even knowing where it's coming from. It's standing in front of you and glaring at you.
Yeah, that last little neckline just shakes out the weekend before it heads up. Yeah.
Yeah. And the final pump up in bond values. Remember, this is the rates. This is the yield. So as parabolic as the yields go up, the value is going same rate down in value. So this is the yields. This was peak bond valuation over here. They were worth a fortune. That was the highest they've ever been. You were paying next to nothing in interest rates. People were giving money. And we were all saying this. How do you invest in government bonds? You get given a negative yield to inflation. That was when inflation was declared as a 2.5% and you were earning 0.4. Why would you buy that? And there's so much of it around. Scarcity is value, not wholesale everything. It's like a pair of Crocs that everybody has in transgender pink, made millions, exported by China. You buy them for $5, not 500. Yeah. And that's that's the equivalent of bonds. That is the equivalent of bonds. And what they're telling you, what's happening is the central banks, you're getting no bid in the yen Japanese markets for multiple days. So this is the situation. I'm the South African entrepreneur. I set up a factory in a rural area, got some free government subsidies because I was creating some employment. I decided making Chinese rubber shoes, a rival brand, let's say, to Crocs, so that I don't damage their name and they don't complain. And I only make them in transgender pink, and they're rubber shoes. They're ugly as sin. It's very late 80s, early 90s when everybody was wearing them. It's no longer cool. It's very, very dated. You know, you don't go anywhere respectful out in them. But hey, I think it's a great idea. I come up and I make them. And I've made so many now. I have a warehouse full, 1 million pairs, but they're not selling. But I'm saying, no, they're worth $100 a pair. But the market, no one in the market is prepared to pay that $100 a pair. I'm saying, no, my current assets balance sheet is huge because I have 1 million of these items at $100 a pair. I have current assets of great value. My company is not bankrupt. And I say, only available for $100. And then no one buys. And then I keep offering only for sale at 100, and there's no volume trade. And as long as I do that, and I keep the illusion that it's worth that, my balance sheet says current assets 1 million times $100. He has current assets of 100 million, and it's a no volume trade. If I allow one person to buy them what they're truly worth and price discovery takes place, and I sell one pair for $5, I instantly force a mark-to-market recognition of that factory of 1 million. Instead of being worth 100 million, it's only worth 5 million. I've lost 95%, and my liabilities for setting up the factory are 50 million in debt. So I have 5 million of current assets and I have 50 million debt, no longer with 100 million of assets counterbalancing, and I'm insolvent. So you need to think of the bond market as a transgender pink pair of old-fashioned rubber shoes that are about as unfashionable as wearing a flipping hat with a penis on it. That's your product. That's your fucking useless product. And that's what a bond is. And there's millions of them. And you need to sell millions of hats with a penis sticking out the top of it. And nobody wants to pay you to wear a penis hat because they don't want to be a dickhead. They don't want to be unfashionable. They don't want to walk around in transgender rubber shoes or a penis hat. You're bust. It's a zero volume market. But I keep saying, no, only for sale for $100. These are brilliant products. You say, well, how many are you selling? 0? Well, that's not price discovery, because what the Bank of Japan is doing is not allowing anyone to sell and being the bid if anyone does sell at $100. But they don't want to buy too much.
I'll take one penis hat. I think I got a friend who would like to wear one, but no. I'll take one penis hat.
You might get a few niche uses for a not such a good friend.
Don't fall on it, though. Don't fall on it. Yeah.
So, I mean, that's how you create a fake valuation. It's a bit like I own 95% of a personal company. I list my company and I own 99% of the stock. We have 100 million shares and I own 99 million of them. And then I list 1 million. That's not a price discovery mechanism. And that's what's happened on certain tokens in the crypto market. That's a captured market with a dominant player. I just keep a bid of $100 under that token. I'm not going to let it sell for less than $100. That means 100 times $100 times 100 million tokens, I'm worth 10 billion. Yeah. But then the market crashes and the money that I think I have comes under question and I no longer put a bid on it and people start selling of the million that's actually free listed and they find there's no more bid under it. It keeps going down. It goes to zero. And that's where the bond markets truly are. How can you have a zero volume market? And the same is happening in the British market, although not as extreme. People are trying to get out and there's a zero bid unless the Bank of England's in there. The Bank of England cannot leave. You can check out anytime you like, but you can never leave. I did a Hotel California YouTube about 2 years ago on that very flipping line. You can check out whenever you like, but you can never leave. The Bank of England is chained to that ship that is sinking. They have to say, who wants to buy bonds? They have to say, it's like the Monty Python skit with the guy who's eaten so much food and he's as fat as a cow. And they go, more food, more food. Go on, sir, would you like one more little mint? And the guy spluttering through puke says, no, F off, I'm full. They say, oh, go on, sir, you know you want it. And he eats the mint and he absolutely explodes. That is the Bank of England right there in a Monty Python skit. The puke, the overweight, ginormous puke monster that has to eat all the puke pies until he blows up and the whole restaurant turns to organs, skin, flesh, suit, and puke. That is your bond market. That is the financial system. It's about a blow. The fat man's been dropped, the mint. And John Cleese is running for the hills. And the poor lady who was being puked on, cleaning up all the guys' crotch, has even left the room. It's just a massive Ponzi. And the truth is about to be revealed. And you're still sitting with your money in banks. You're still sitting with a pension that you think you're going to get paid. And you haven't yet converted it to a self-invested personal pension. You haven't started to buy assets that give real yield or physical things that will still be there tomorrow morning. I mean, it's there. You've got a no-bid bond market unless the central bank gets involved. What does that tell you about the attractiveness and over-proliferation of an underwanted topic?
Yeah. I get it. Then there's, I don't know, the world's about to blow up, and I'm just, and that's why I want to know how it's like, and that's why I think I'm going to be joining the club, and because I want to know what it's going to look like when it blows up, and let's make some money on the ride down, because yeah, like you said, there's a lot more space for that to happen, and you don't need to have a lot of risk to do it, like. That's the big thing is
actually you do. You need to submit to a process. You need to submit to a method. You need to be patient. You need to recognize that these things don't move much in a day, but they move decades in a month and a year. These are the years, you've had years where nothing happened, and these are now the days where decades are going to happen. But you still need to sit the day out. You still need to not get sucked in by your P&L. I was explaining to the community again today, talking them down. We still get the odd guy that overtrades it with size. We're getting the cream of the crop, the people that recognize and own their own outcomes, that have already manifested in the world. Our program is not cheap, but so they're smart and they're capable, but we're all still emotional. And I had to learn many lessons many times, and some of them have to too. So don't spoil it.
Yeah, this isn't a retail.
Just execute right once.
This isn't a retail program. Yeah, you're providing You're providing the structure. It's not a retail program. Like, this is for like professionals who have had success in their life, who have a significant amount of capital, and they're like, I want to do it, and they want to take control. You
don't have to be a professional trader. But you do need to have a degree of personal manifestation that you've achieved in whatever your field
Correct.
is. And
Professional
that's someone
success
who's
in
owned
something.
his own outcomes.
Yeah.
Yeah. In some senses, not having been poisoned with bad trading ideas is almost beneficial. So you can be a beginner entirely, but be a mature beginner and recognize you will harvest your own outcome. I won't harvest it for you. I can only give you guidance. It's like your trainer for a UFC fight. You know, you can be taught quarters, you can be taught how to punch and how to kick, but when you're in that ring, you're on your own. And your outcome will be dependent on how hard you trade before the fight, how well you execute, your size, your genetics, your level of preparation, your capabilities, your mindset, and what you bring. So you will harvest your own outcome, but you have a chance of incredible gains if you can keep it small, modest, and have a couple of tiny, well-sized trades that you just set and forget. The wave does all the work. Surfers don't work. They keep their balance and they stay on the goddamn board. The wave gives them the 65 kilometers an hour down the face and then the subsequent ride all the way into the beach. You don't have to do that. Just survive and stay on the board. The engine's already provided for you. You try add on that and put an outboard motor on or start swimming and, you know, flapping your hands. No, that's not going to help. Just stay on the board, be patient, and people are going to be shocked. We still have the Korean one. I have a high percentage outcome likelihood of that doing well through 2000s. I mean, that alone is a 7-digit plus trade for me on that single trade. And that's, you know, a lot of our guys have got that one on and have had it on for a long time and are watching it work its way through the system. There's going to be a blow off that's going to shock people. That's still to come. To all of you saying, I'm too late, you guys are already in. You get given opportunities to climb in. I teach you that the market loves you and keeps giving you opportunities. It's like life. You keep getting an opportunity to do a business or a new idea or a new thing. It's you turning most things down or not seeing them. You will get an opportunity to get in. And we will help community members. Not everyone. We've got guys who just joined a week ago. We don't say, sorry, you guys are all stuffed. We all got our seats on the blue train. You can go run behind the carriage. No, I say, here's an opportunity. See, on the lower time frame, if this is never seen again, a squeeze, a smaller time frame move, you can break into the straight here. That's the level. That would be your stop. But recognize you're getting it into, you know, midstream already. Don't oversize. Boom, 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 boom. You might even take 2 or 3 entries to happen. But then you've got a seat on the train and you get the rest of the ride. And because you're on a smaller HVF, it might have a very narrow funnel. You might get the most crazy risk reward. You could out risk reward the other guys that are in earlier. So the market just loves you, but most of the time people aren't looking. They're listening to narrative. They're listening to stories. They're watching CNN. They're watching Telegram groups with Trump's going to do this. So-and-so is going to do that. And I heard the news that gas is going to do this. Charts are your gift because it is the true footprints in the sand. We are snipers. I've just bought a bunch of baseball hats with snipers on it. We're going riding in the Kalahari. I'm going to do live tour updates from off the back of a motorcycle, all bought from trading income. A lovely motorcycle, lots of kit and gear. I've got drones and helmet cameras and everything. I'm like doing the little rich kids desert experience, and I'm going to make guys part of that. And I'm going to film every day. I'm going to try edit in the evening, and you can see it. I'm going to be talking about all of these concepts. And I'm telling you, all paid for by the market. All paid for by the market. USD dominance. We've already had an incredible ride, and it's not begun yet.
When I met you and you pulled up in your motorcycle, I was like, this guy is James Bond. He's a badass. I was like...
which one was it? I'm trying to remember. Was that in Cyprus?
Yeah, exactly, in Cyprus, yeah.
Oh, that's the 701 Husqvarna. Yeah, I've got a new one. I've still got that one, and I've got new one. I've got motorcycles in different parts of the world. I one day want to get them all in one place because I've got to have bikes to ride everywhere. Yeah, so it's a lovely bike. Yeah, that's a cafe.
You got to stay diversified, Francis. You got to be able to have fun everywhere. So it's okay.
Exactly. And you know what? After that, even though the value of them will go to nothing, the value of them is the enjoyment it gives me. But I can tell you, physical things will still be there the next day. Now imagine the value of gold. It won't rust, doesn't require petrol. Now imagine the value of silver. That's clearly shortages as they go ever more green, and everyone's going to be solar everything. I'm sitting here where guys have batteries. They know the load shedding hours. They have generators. for everything. Europe is unprepared for this winter. This is going to be such a winter of discontent. And I keep saying it not because I'm getting joy or glee out of it, because I want people to leave. I want people to take action. I want them to buy generators and batteries if they can't leave and they've got kids at school. I want them to get prepped, because if you know what's coming and you take action, you don't get psyched out by it, and you look smarter than everyone else around you. Be smart. Choose to be smart.
And make money off of it. And make money off of it.
And make money of it. Short the euro, short the pound against the dollar, particularly against the Asians. The Asians are going to outperform to the downside, even the pound and the euro. Short the yen against the dollar, short the won, and let me tell you, make money and go buy yourself a generator. Go buy yourself a diesel generator. Go buy yourself batteries. Learn how to plug them in so that your Wi-Fi can run and you can still jump onto your laptop, still see your trading account. Yeah, prep.
All right. Well, Francis, I know we only had like an hour and like we just kept going. So like I want to keep you on your schedule. Market
I
Sniper.
think I need to wind down.
Yeah. To give us, take us out.
Thanks. Yeah, thank you so much, by the way, for inviting me on. Thank you for the out of the blue message. It's nice to hear how well the guys are doing, because as I say, the ones that want to tell me. It's not my business. I don't ask people how big they are, what they're doing. It's great to see it. Thanks for providing a reliable platform with extra leverage. And many of the markets, guys can trade the USD Hong Kong dollar peg on Scandinavian capital markets, by the way, as I am doing personally. That peg we expect to fail, and then pegs never fail quietly. It's not tiny peepee through, okay, that's it. We failed a little bit, now we're back. No. Damn walls burst and damn walls burst. And I've done this before. I've done it twice on the Euro Swiss franc, by the way. And let me tell you, they burst big when they burst. In fact, people go bust that are on the wrong side of that. And as hard as they go bust, the people on the right side of it make small fortunes. This is a polarizing event coming. These guys offer it to you. They're reliable. They're good guys. You've just met one of the directors right here. Thank you for having me on. Go to themarketsniper.com to book a call if you want to be part of our community. Part of those guys that are outperforming everybody else, that an independent lead man voluntarily came forward of that information. I don't need to write marketing. My community and people like you do it for me. Out of the blue, I just go, oh, how nice to hear. What a lovely thing. Do you mind if I publicize that fact? Totally organically. Just for the record, I never asked you to write anything on this. You just out of the blue sent this to me. Yes or no?
Yes, yeah, totally. Francis, no one ever says when you're doing good, but like you always get the complaints. And I was like, man, these guys are doing awesome. Like, let me freaking say these guys are doing awesome, because like you probably don't know your trades are doing well, but like the fact that your guys are following your methods so well and making money and taking pips and not over trading or over leveraging, like you need to know, like, job well done.
Let me tell you, that beats any other social proof that I brag about personally or whatever, just to try get people to believe in us. That my clients doing well is the happiest moment of my day, because I'd rather actually make 10 million out of this reset and do it with 500,000 odd community members all making a couple of bar each, then make 100 million. I don't need 100 million. In fact, if I was a hedge fund manager with the trades we've called, and we were managing a few billion, and people will, I had all the money management guys and all of this, and I was just calling the trades, they were sizing and putting them on, I'd probably be worth, just in the last 2 or 3 years on the calls. I don't know anyone who's got into them as early as us and have done them and been as persistently accurate. And we've had years where we've been wrong. I've sucked. So I just want to balance it out. This is not a brag thing. But the reason I'm not is I hate the idea of regulation. I hate the idea of plugging into the formal financial system. I hate the idea of marketing a hedge fund and having to release sheets and doing all corporate things. I hate the corporate world. I'd much rather climb on a motorbike with friends and ride through the Kalahari for 2 weeks. So I hate all of those things. And I often joke about this. There's things people need to experience. They need to learn how to add value in the world. So we've got IT guys, engineers, doctors, medical, etc., physicians, all forms of people. Do something high, entrepreneurs, property entrepreneurs, all kinds of entrepreneurs. Do something high value, see value, and then learn to manage your money. The world requires that you get that experience. I don't want to be the guy that denies that of you. By learning to understand the financial system is one of the biggest growth journeys you get. And if you're a hedge fund manager guy, you say, don't worry, just go do your job. I'll look after your money for you. You're being denied a great learning experience, a great growth. Trading is a microcosm of life. It's just intensified. You learn more about yourself in a shorter time trading. It's a personal development program. It's a bit like me standing in for you on your wedding night to consummate your wedding for you. There's some things you just got to learn to do for yourself. You know, there's certain things you should be doing yourself. Taking your money and saying, leave it all to me, I'll leverage up, I've got a hedge fund, you'll get a note every quarter of how you're doing, and I'll become a billionaire off everybody else's money and some mega banks leverage that they'll give me, and I'll have a proper, you know, discretional sizing guys, and I'll just put on the trades or call the trades, my brokers will put them on, and, you know, I'll just work out of Mayfair in London. I don't actually really want to do that. I don't want to deal with regulators and corporate environment and sweet talks and road shows and beauty contests. Go and trade for yourself. It's the greatest learning experience you can have about yourself. Start small, pay your fees small, learn a method, adhere to a method, submit to a process, and then see your P&L grow, and that damages you. Your P&L growing damages you because you want to increase size. You say, I should have been 3 times bigger, I would have made 3 times more. Your P&L goes down, you panic. Every single form, you learn to not trade a P&L, you learn to build a view and adhere technically. And to get emotional patience as well. Because even though this is going to be the fastest, biggest, macroest thing, if you look at the USD JPY on a monthly chart, it's hardly looked back once and it's almost vertical. There will still be on smaller time frames periods where you might doubt. That's where you sweat and earn your equity. And this is such a ridiculous market that speculators get to make obscene amounts of money over nurses, doctors, and people picking up pieces of bodies that have had car accidents and everybody else that are doing everyday things. We shouldn't have a society like that. But let me just tell you, if you understand the game, and this is the game, I never drew up the rules of this game. I'm telling you the highest way, and it's a massive personal journey for you to personally develop. You can make a bundle if you come with 10, 15, 20 grand in this tsunami, but you can't get it wrong and you can't get greedy. And you can't trade your P&L. You just adhere process, 1%, 2%. If I've got 5 trades and they're all dollar long, that means you're 5 times the risk on the dollar. You got to choose your time. You got to sit back and wait until we say there's a smaller wind up here. This one might hold. You might be able to break into the trade. You got to watch it go up when you're not in it. You've got to earn that money in patience, diligence to process. It's a mental game. It's not a physical game, it's a mental game. And it's a personal development program. And you will make mistakes, and that's okay, because I've stumbled and tripped and fallen on every hurdle that's been put in front of me 3 or 4 times. And yet I'm sitting with accounts hemorrhaging cash. We've got puts on the TLT, we've got longs on dollar across the Asian pair. They're all hemorrhaging cash. They're all hemorrhaging cash. And I leave them because they're going to hemorrhage more. I've got shorts on crypto. Since 55,000 on Bitcoin, on various alts. They're all hemorrhaging cash. So come and join us. This is a chance. It's the biggest chance in speculation, and you're broadly going to be short just about everything. And shorts are amazing, but you need a method, you need a process, you need a good, reliable broker, just here, amongst one of very few that we affiliate with, and you've got all the tools you need to build immense wealth, to buy yourself freedom in these crazy, crazy, crazy times. Thanks, Mike, for having
Bitcoin
me.
as well. Thank you, Francis. I said you can short Bitcoin as well.
You've got Bitcoin as well, yeah. That's right.
Francis, as always, thank you. Like, your views are great. They help give a broader perspective to the narrow craziness that's in the world. So thank you.
Pleasure to chat with you, Michael. And join us for all the tour updates as well through themarketsniper.com as we go through the desert on our bikes and fall over in the sand.
Yeah, I'll definitely keep an eye on that. Thanks, Francis, and have some fun. Stay safe.
Absolutely. Bye for now.
Okay, bye-bye.